Have you ever wondered what else you can do with your money to make it grow faster?
Do you have your own savings?
Yes, meron.
How do you manage your account?
Ayun, para sa mga estudyanteng katulad ko na weekly yung bigay ng baon, as much as possible, yung mga natitira sa end of the week, itatago ko sa sa akin lang. Tapos kapag may kailangan akong bilhin, as much as possible, I make sure it's a good investment.
Are you aware of the Philippine Stock Exchange?
Medyo,
What do you know about it?
alam ko sa Philippine Stock Exchange, dito malalaman kung magkano yung market value ng isang company. Kung may rise siya or may gain or lose siya per share.
This is what Filipinos usually know about the Philippine Stock Exchange. The Philippine Stock Exchange is actually like where stocks are traded day to day. Their organization provides and ensures a fair, efficient, transparent, and orderly market for the buying and selling of securities. In short, this is where companies and individuals invest their money. So what is investment? An investment is simply any vehicle into which funds can be placed with the expectation that they will generate positive income and/or that their value will be preserved or increased. To further understand investment, we have set up an example for us to observe throughout the discussion. Let us say you want to start investing in the stock market. You'll probably ask what is the minimum amount for you to invest. Actually, there is no specific minimum amount. You'll just have to follow these simple steps. First, you need to meet investment prerequisites. It means that aside from the money you are investing, you still have a sufficient amount of money for meeting emergency cash needs. Second, establish your own investment goals. It is your own personal objective as to what you want to attain in investing. Accumulating retirement is the most important reason for investing. Thirdly, adapt an investment plan. Next, start to evaluate different investment vehicles. In investment, you'll see that there are different types of investment vehicles, such as short-term vehicles that usually have lives of 1 year. There are also common stocks that represents your fractional ownership in a corporation. Fixed income securities such as bonds, preferred stock, and convertible securities are also investment vehicles. They, on the other hand, offer a fixed periodic return. Mutual funds are another investment vehicle where companies pool money and manages a diversified portfolio of securities. Last, real estate. Real estate is also an investment vehicle since it offers returns in the form of rental income, capital gains, and the like. From there, you'll choose your preferred investment vehicle that is in line with your investment goal. The next step for you is to construct a diversified portfolio. You will assemble an investment portfolio that meets one or more investment goals. You will need to do the process of diversification. That includes the inclusion of different investment vehicles that is needed to create an effective portfolio. And the last step is, you need to manage your portfolio. It involves the monitoring of the performance of your investment. In every investment, you cannot avoid to encounter risks and gain return. For an investor, if there is a high risk in an investment, they are expecting for a high return and vice versa. This is the concept of risk-return trade-off. But what are risks and returns? Let us first talk about risks. Risk is a chance that the actual return from an investment may differ from what is expected. And here are some of the risks that we may encounter in an investment.
Business risk is concerned with uncertainty associated with the earnings of an investment and its ability to pay investors' interest, dividends, and other returns.
Financial risk. With this risk, the greater the company's debts and interest obligations, the greater its financial risk.
Next is the liquidity risk. It is the risk of not being able to liquidate an investment at a reasonable price. For example, real estates may sometimes be priced lower due to urgent selling.
There is also the market This happens when the value of investment returns declines because of factors that are not connected to the investment, such as changes in economic conditions. And lastly, event risk.
It takes place when there are unexpected events that has a direct and immediate effect on the value of investment. An example of unexpected events are typhoon, earthquakes, and so on that affect the value of investment, such as on properties.
Let's move on to return. Well, return is the level of profit from an investment, or in other words, this is the reward for investing. So where did return came from? It is from these sources called current income and capital gains or losses. Current income is in the form of dividends from stocks, interest received on bonds, rents received from real estate, and so on. For these to be considered income, it must be received in the form of cash or be readily convertible into cash. Capital gain is the amount by which the proceeds from the sale of an investment exceed its original purchase. But if an investment is sold for less than its original purchase, capital loss will occur. And why is return important? It is because it allows us to compare the actual or expected gains provided by various investments with the levels of return we need to be fairly compensated for the risks involved.
Beginning to invest in stocks. Key points to remember. First is, good investors know something about the company before they invest in the company's stock. Next is, gather information to evaluate a potential investment in a stock. Evaluating stocks. There are many sources where you can find information about the stocks before making investment decisions. Some sources include newspapers, the internet, stock advisory services by brokers in investment house, corporate news publications, and annual reports and websites. Another point to remember is to learn what the information you gather means. These are the guide questions you can use. Are sales increasing? Are revenues increasing over time? Are earnings per share increasing over time? Another point to remember is there are periods where stocks decline in value. Time is your most precious asset. Those who start investing sooner rather than later have a tremendous advantage. Another point to remember is the key to success is to allow investments to work for you over the long term. Long term, but the final decision is in your investment goal and all the money will always be only yours.
This is how you start investing. Number 1. Choose your stockbroker or trading participant. Number 2. Open a stock brokerage account. Number 3. Place your buy and sell order by making a phone call to your stockbroker. Number 4. Monitor and keep track of your investments.
Never depend on a single income. Make investment to create a second source.
In able to become richer, one must not depend only on his or her salary. He or she must invest to bring more profit.
If you buy things you do not need, soon you will have to sell things you need.
Do not buy things that are not necessarily needed, because if you continue to practice that way, time will come that you would have to sell your important things in order to live.
Do not save what is left after spending. Spend what is left after saving.
One basic rule here is that you always put your mind to save first before you spend.
Never test the depth of the river with both of your legs.
You should not give all things unable to risk. Save for yourself first than giving it all.
Honesty is a very expensive gift. Do not expect it from cheap people.
Know the people that has the credibility, reliability, and the one that is really trustworthy.